Hey everybody, Boris, Forex. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, pound dollar from May 21 to May 25, 2018. And the big question for the week ahead is any bottom in sight. It really feels like the majors are starting to bottom out a little bit against the dollar. Dollar rally is slowly, very, very slowly coming to a halt. It may be a little bit premature, but we're certainly coming to some very key support levels on the charts, which I'll go through with you in just 1 second, to make me think that maybe next week could be a small dead cat bounce week for the euro, perhaps even the pound, although the pound looks a lot more problematic. So the euro really moved down into fresh 2018 lows. We broke the 18 handle, and now the 17 handle, which is a very, very longer term support, comes into view. We'll take a look at both the daily and the weekly charts, and I'll show you. The bounce back is pretty shallow, but it could potentially cover all the way back up to 1900 on the euro. On the yen, we did have the big breakout against the 110, and that's actually very significant and certainly important. But now we come into that whole 110, 112 area, which is very, very chunky. And I think it's going to have a hard time walking through that area unless U.S. yields continue to firm up, which they started to sort of slow down as the week came to an end. And then cable is sort of, I think, the weakest link in the chain because we have UK data this week that could be continuously negative for cable, and that could really push the move all the way down to perhaps the 34 handle, maybe even through the 34 handle if it comes in negative. UK really is the primary fundamental data on the calendar this week. Let's take a look at the calendar and see what's up for the majors. So there are really only about two primary events or three primary events for the majors that are important this week on the calendar. We have the Eurozone PMI, the preliminary PMI data, and while that itself is not market moving, what is valuable about that particular data set is it's the single earliest and perhaps the best indicator of just how weak, strong the European growth has been. The PMI data was the first to show the slowdown in European growth after Q1. Now, what's interesting now is that because the euro has really depreciated against the dollar over the last couple of months, I wonder if the lower euro may be stimulatory, especially to the manufacturing sector. So we'll be watching all of those levels. Now, PMIs are all well above the 50 boom-bust level, but the key thing here is, do we have a little bit of a rebound? Kathy thinks there's a potential here for a small bounce up, so she's mildly bullish the euro on the fundamental data. Then the other big data set this week is all the UK data. We have the UK inflation data, which is incredibly important because it's sort of like the final barometer of whether the Bank of England is even going to seriously consider any kind of rate hike in the near future. We do have also retail sales, which is another very important data set. Both of them, Kathy thinks, are going to be bearish for cable. So in many ways, cable looks to be the weakest link in the chain, as I said, sort of the potential relative weakness trade if those data sets come through, because any kind of weakness in UK data is just going to compound the negative sentiment that you're seeing in the pound. And even though the pound is grossly oversold, there's still room possibly to push it all the way down to the 133 level before we find any kind of meaningful support. On the U.S. side, we just have FOMC minutes. We have a little bit of housing data. None of it is really that important. And we finish up the week with U of Michigan and durable goods. So it's sort of a very, very quiet week on the U.S. front. It's really going to be a question of whether we're going to run this on the yields and how the markets feel about that as well. Oh, let me find the right chart. Sorry, I wanted to look at the dailies. So let's look. I got to go into my majors set. So here's euro, and I'm looking starting first with the weeklies because I think it's interesting. So the weeklies look miserable. I mean, if you're looking technically, it certainly looks like just a complete negative trade to the end of the week. We're ending up at the lows of the week. So certainly very bearish candle. But, and this is the key thing, when you look at this particular structure, you have to look at it in context. We have three strong negative weekly candles to the downside. So a lot of sell-off has already occurred. And we're coming into this very key support level at the 117 level. So my view here is, if I'm trading this, I'd rather be a buyer than a seller, giving myself room to 1650. So I think the whole 1700 to 1650 is probably a reasonable room to absorb any final selling here for potential bounce back. If the PMI data comes in positive, that would provide the economic catalyst, the basic excuse for us to maybe bounce back. Also, the other key thing, of course, is that the 10-year US backed off the 310 level. And if we start to come back and trail back towards the 3 level, that provides a little bit more short covering power. Overall, the trend in the euro is certainly to the downside. All I'm saying right now is it just feels like it's grossly oversold. And if you're going to be making a sort of a small foray into a buying trade, this is the place to do it because it's coming up to some very key long-term technical support levels. Yen, on the other hand, of course, nice big breakout. Yen has been a very quiet but very stealthy trade to the upside. The weeklies really show this. It's sort of been so slow that it's almost deceptively interesting at how strong this trend has been from 105. But now that we took out the 110 level, and that was a big takeout, there's certainly room here to pause and digest, because if you look at this overhead here, it's actually the 111, 113, not even the 110, 112. The 111, 113 is the massive chunky area of resistance. And it's going to be very difficult to just simply plow through this, I think, in any kind of meaningful way. We've also had, and this is interesting, 1, 2, 3, 4, 5, 6, 7, 8. 8 consecutive green weeks. That's quite a lot of overbought trade. And statistically, anytime we get above 7 on a weekly basis, it really makes a strong case for at least some potential profit taking. So here again, I think it's an interesting trade with like a 112, maybe if you really give yourself plenty of room, 112.50 stop, to just see if you can pick the top here, because it's grossly overbought. It's not that there is anything really fundamentally wrong, and the U.S. Data set has been very supportive. It's just simply that I think that the rally is due for a correction. And if you're going to pick a correction, at least you want to do one statistically sound when you've had so much consecutive positive data. And finally, here's cable. Now, cable also looks grossly oversold, but cable is facing, I think, challenging fundamental data, and maybe just a little bit more of a sell-off before it really hits strong support. The strong support really comes in 133, so you have about 150 points worth of sell-off. It's not that cable, I think, is a straight down trade here, but there's just more room to push it. So in some ways, if cable is going to be the relative weakness trade here, we'll talk about the crosses, but it obviously sets up the euro pound as potentially maybe a trade to the upside as you go forward. So that's how the major setup for right now. We'll take a look at the COM dollars next.